The reason I bring up Bitcoin as the end game is that it's part of the future system. So the reason that we have 1% controlling 33% of the net worth in the United States is because those people don't own any fiat cash. They own assets. Those assets are all valued, where if everyone tried to sell them, they have no value. It's about a Ponzi scheme, meaning you want to sell that, someone else needs to buy it. Bitcoin is the opposite side of it. It is a system that is not based on leverage. It is a system where it is being driven right now by the minority.
The idea that growth equals jobs has been drilled into economic thinking for a century, but that link is breaking fast. Legendary investor and macro thinker Jordi Visser points out that GDP, a metric designed for the industrial age, no longer reflects the reality of modern economies. Within a few decades, he argues, we could see entire systems running with almost no human labor. If that happens, the framework we use today, whether it's fiat money or the old industrial economy, simply won't work. Something new will have to replace it. Visser says the cracks are already obvious. Wealth keeps concentrating at the top, not because the rich sit on piles of cash, but because they hold assets. Yet those assets are only as valuable as the next buyer allows them to be. That makes the system inherently fragile, almost Ponzi-like. Bitcoin, he argues, doesn't suffer from this flaw. It isn't built on leverage, and it isn't controlled by institutions. Instead, it's being accumulated by regular people, plumbers, electricians, police officers, who recognize its long-term value while fund managers remain hesitant. That grassroots adoption makes it a bottom-up system, the opposite of how traditional finance operates. AI adds another layer to this disruption. By driving replication costs to near zero, it erodes the foundations of fiat-based assets. In that world, only truly scarce assets hold their ground. Visser sees two clear moats: gold, the timeless store of value, and Bitcoin, the digital counterpart built for the future. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
John von Neumann, Moore's Law, the personal computer winning Time Person of the Year, Time Machine of the Year in 1982, the internet, the smartphone. Basically, this isn't about necessarily AI. People need to think about innovation as when is the end game. So at first you get so efficient that you don't need debt. And that's what the Mag 7 were. They didn't need debt to get to the size they are. I just want to reemphasize again, these companies did not need debt to grow to the size they are. It's an amazing thing to think about, but you broke the historical correlation between debt and growing your business. Now you're breaking the historical correlation between the concept of GDP, which is a statistic created during the Industrial Revolution, and human intelligence or people working. Theoretically, you could have an economy that has nobody working, theoretically, in, 50 years, 35 years, and we might be there. Along the path between now and, let's say, 35 years, if that were to occur, a new system needs to be born, because the current system, whether it's the fiat system or the industrial economy, is no longer relevant. You can see that with the concentration of wealth that's been created. So the reason I bring up Bitcoin as the end game is that it's part of the future system. So the reason that we have 1% controlling 33% of the net worth in the United States is because those people don't own any fiat cash. They own assets. Those assets are all valued, where if everyone tried to sell them, they have no value. It's about a Ponzi scheme, meaning you want to sell that, someone else needs to buy it. Bitcoin is the opposite side of it. It is a system that is not based on leverage. It is a system where it is being driven right now by the minority. So I saw a recent thing that I put in my video where I forget, the Bank of America did a survey in one of their fund manager surveys, and it was like 0% of the people had any weighting to Bitcoin still. These are wealthy people. So the people who own Bitcoin, again, for the majority of them, in terms of those the people numbers, they're at the lower end. And I meet those people. I met you, John, at one of those events. I meet them at Robinhood. I'm fascinated by how many people, plumbers, electricians, cops, watch Anthony Pompliano. They speak about Bitcoin. They speak about all of these things that does not come up on Wall Street. So AI to me is the perfect side of the disruption of fiat assets. And so I always say this, let's just pick real estate and not pick something that is financial. Because I think most people could say, well, I think stocks are worthless and bonds are worthless. Okay, but real estate's worth something. Okay, so if real estate's worth something, what is the value of a house on the Hamptons? If it cost X amount of dollars to build, you get insurance. They have a part that's the land and they have a part that is the house itself. Well, if humanoids can go build the house for zero, how much is the house next to it worth? Well, then it's just the land. How much is the land of an overall house? You're going to get to the point over time that people are going to realize that fiat assets are not worth what they're supposed to be in a time of replication. And that's what AI does. It's deep fakes, which means it can replicate anything. So the only thing, in my opinion, that has a moat around it is gold on one side, religion for people, and then Bitcoin. Those are the only three moats I'm aware of where people actually just believe. Everything else is an idea. And I think all ideas are about to be disrupted by AI.
Jordi Visser says China's story over the past decade hasn't been about explosive growth. It's been about managing a slow-motion crisis. Debt was piling up, growth kept stalling, and in many ways they were facing their own version of the U.S. housing crash. Instead of a dramatic collapse, though, Beijing stretched it out, carefully controlling the slide and keeping the system afloat. Visser says despite that drag, China made some very sharp long-term bets, especially in technology and artificial intelligence. They've secured a strong lead in hardware, which shifts the balance of power. Militarily, this leaves the United States in a vulnerable position. What's more concerning, he argues, is that Washington only began to fully recognize the scope of this disadvantage around the time of the so-called Liberation Day market shock. Visser recalls that when panic hit, Trump attempted to calm markets with a 90-day tariff pause. But China countered with a far bigger threat, cutting off rare earth exports. That didn't dominate the headlines like tariff numbers, but it sent shockwaves through global governments. The reason is straightforward. China controls over 90% of rare earth processing, and these minerals are indispensable for electronics and advanced weapons systems. Without them, U.S. military production would grind to a halt. Let's get back to the interview.
Winning is a complex question when you leave it at there. And the reason I say that is not to avoid giving you an answer. I traveled to China for 1 month a year, beginning in 2007 until 2013, when to me the handwriting was on the wall that China had reached a peak in growth. They had excess debt, and as growth was slowing down, the government was going to have to do their version of what the U.S. went through with the housing market. And I believe that's what they've been doing for the last decade. They have the same tools we do. They didn't have to go through 2009, partly because their banks were not exposed to the rest of the globe. I think China has made very, very sound long-term decisions on where we stand right now in artificial intelligence. One of the most optimistic things I tried to get across to people this year was this concept that the U.S. and China were not in a position yet where they could be divorced. And this gets into the question of who's winning. China is winning on the hardware side for sure. We are exposed militarily in a very, very large way. And what's alarming to me is that it seems like the U.S. did not realize this until this year, and in particular did not realize this until Liberation Day and the days after. People must remember this, but when Trump turned around and the markets rallied, where he basically said, okay, we're putting a 90-day pause on all tariffs, he didn't do that for China. He actually escalated with China, went up to 100 and something percent. The numbers seemed ludicrous. And then 3 days later, China said, all right, we're shutting down rare earth. It didn't get the same front press as the 150% did, but it sure made the administration panic and the rest of the globe panicked. And the reason is because China is responsible for 90+% of the processing of rare earth. Now, I don't think many people knew that before Liberation Day. I don't think many people may even know it now, but all things that you own electronically need rare earth, and they control it. So if you want to have a military, and again, this had an impact on the decision making in Iran and the bombing. Israel was using a lot of weaponry, advanced weaponry with Iran, and that made it a very big issue because the U.S. doesn't have the ability of making a lot more rare weaponry without having rare earth. We don't have our own supply. So all of these things are linked together. And so on one side, China made the decision. They're ahead on drones. They're ahead on humanoids in terms of the overall size of them. They're ahead in electric vehicles right now. BYD is taking over. And now they're making inroads in semiconductors. Where the U.S. is winning is if you asked every Chinese citizen and gave them free rein to walk into the United States of America, and you did the same thing for the U.S. to walk into China, the U.S. still, if it had an open door policy, would have floodgates of people trying to come in. So the winning, it just depends on how you view it. And that's why the countries are linked. You cannot just change things overnight, meaning a country cannot do to its people what China has done in the past and not run into a situation where the people feel like they should come and move overseas because they don't trust their government. If you don't trust your government, whether it's in Argentina, whether it's in Brazil where I live, whether it's in China, the U.S. generally wins in that. And even with what's gone on this year, I would say the U.S. still generally wins because that's what goes on. But I think this linkage between the two countries has to stay in place for a period of time because it is a global world. And if people had their choices, it would be a different thing. So I think the U.S. is losing on one side, but winning on the other. Yeah, I'm focused on the fact that, like I said, the majority of people still believe that China and the U.S. are, at war when it comes to AI. And I think a lot of that has to do with chips. It has a lot to do with the Ivy League education side. It has a lot to do with a whole bunch of different things. China has not yet, let's say, lessened their restrictions on rare earth. They've not really been buying soybeans this year at all in the U.S., which is historically a big ticket item for the U.S. So I think China and the U.S. are still negotiating and still trying to figure out. I mean, as this morning, there was a story floating around that China wants the U.S. to change their views on Taiwan. These are all big negotiation things, which I think means we're not finished yet. And I think Donald Trump wants an agreement and wants a grand bargain. If he didn't, I think he would be less constrained when it comes to China. He doesn't negotiate from a place of weakness, yet he goes out of his way to say that he has a great relationship with Xi. There hasn't been any kind of raising of the threatening tactics at all, which was one of the things that China kind of required to get to this point. So I think investors have underestimated, number one, that there is a high likelihood, in my opinion, of a mediation settlement. As someone who went through a divorce once, mediation basically ends, the need to go through the divorce, sets up the financial constraints, and maybe it's a mediation where the divorce is agreed in 4 years, whatever the case is. I think that's what we're headed towards. Now, again, I think this will be taken positively by the markets because, again, the uncertainty still remains for businesses. If there's some kind of agreement between China and the U.S. for the next 4 years, the one thing I still hear from small businesses throughout the United States that have been impacted by the tariffs is that we still can't replace all of the building that we did of the supply chain through China quickly. So if there's clarity on the US and China in any shape or form, I think you're going to see PMIs pick up. I think you're going to see the manufacturing sector, particularly in the middle part of the country, the soybean stuff, the farmers, everything, have a sigh of relief.
Picture an economy where output keeps expanding while human labor steadily disappears from the equation. That's the direction technology and automation are steering us toward, and it raises a challenge no government spreadsheet is designed to solve. Traditional metrics like GDP, rooted in an industrial past, miss the point of a system being rewired by AI, tokenized finance, and digitally scarce assets. As production costs collapse, the very foundation of fiat wealth, claims on future growth, loses credibility. In that vacuum, what holds value are assets that can't be inflated away or replicated by software. Gold has carried that role for centuries, and Bitcoin is now stepping into the same arena as a grassroots, digitally native alternative. Add to that the geopolitical chessboard, where China's grip on critical minerals and its lead in hardware tilt the balance of power, and it's clear the old frameworks are being dismantled on multiple fronts at once. The future financial order won't be decided by policy memos alone but by who adapts to scarcity and technology the fastest. As these shifts collide, automation stripping out labor, AI compressing costs, and rival powers weaponizing resources, the open question is whether the US and its allies can reshape their economic architecture in time, or if they'll be forced into a system designed by others. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.